Hey guys, Matt here. Welcome back to my channel. So one thing I like to do every week or every other week or whatnot is to show my portfolio. I will show all my stocks, all the moves I'm gonna make, all the strategies or whatnot. And I think that sets me apart from other stock YouTubers out there in that I show my receipts. And right now, yeah, I mean, if you've been following me for a while, this is pretty evident, but I am getting my rear end handed to me. I am getting absolutely destroyed. Like, I am barely in the green right now. Barely. So, unless I get really, really lucky really soon in the next couple of days, yeah, I will start being at a loss. The middle of this week, the Fed is going to start its interest rate hikes. And so, I'm pretty sure that's going to make things a lot worse in the short term. And as much as it sucks, I mean, we got to react to it, right? And so what I've been doing in the meantime is I've been putting my money into stocks. Now, the first part of my strategy is that every month I put $1,500 in, and this amount here is with the $1,500 I put in a few weeks ago. So yeah, we're doing really bad right now. Now, I get a bonus. I should be getting a bonus for my first job over the next few days or so. I'm going to be putting a few thousand of that into here. So I'm going to have even more money to put into this. Now, what stocks am I buying? Well, let's talk about it. I want to respect your time. So if you just came here to get the stocks I'm buying and leave, well, here you go. So since the 7th, I bought some ARK, I bought some Fedex, I bought some Facebook, I bought some Intel, bought some more Palantir, I bought some more Facebook, and I bought some Fedex. So to go into more detail, I want to start with Gevo actually. So Gevo is a stock that I've been buying for a while, fairly heavily. And I want to talk about a comment I received in one of my earlier videos, and I took this one to heart. And actually, it was a really good comment. You know, don't put more than 10% into a stock whose the company is not profitable. And Gevo is very, very far from profitability. It's barely even making revenue. Although I'm not quite to 10% yet, I don't want to put too much more money into Facebook. So for the time being, I've suspended my purchases of Gevo into more stocks. Like, I have plenty of other stocks which have revenue, which I think have a lot more promise that I think deserve my money. So I'm putting my money into other stocks for the time being, and then once I'm satisfied, I may go back to Gevo and start trickling into some more shares. And now there's one thing I want to show you here, and I made a video about Gevo, I think last week or the week before, talking about how it went up 30% in one day. Well, that went way back down. And about Gevo, like, yeah, it is very true that the short interest is just out of control. Like, it just gets worse and worse and worse. And, I mean, I can't really blame the shorters right now. Like, we all know that if you're in the Gevo, I mean, we all know that the money is eventually coming. That's the whole point, is that it'll be on its way over the next couple of years. But as of right now, no, Gevo is not performing. It keeps missing all of its earnings. It has no catalyst and will not have a catalyst until the RNG plant, well, is coming online now, but actually starts bringing in revenue. Once that happens, Gevo might have a leg to stand on in order to combat the short interest. But right now, yeah, I mean, I can't really blame the shorters right now with the way the market's going. And keep in mind, this short interest is just temporary. It's not a permanent solution. At some point, when the stock drops low enough, like, these guys are going to buy their shares back. Or if we get a short squeeze, but either one way or another, the short should eventually stop. Now, Intel I bought mainly for dividends. Now, I do think that there's some growth coming in Intel over the next couple of years as it builds its new factories and stuff, but that's like years out. It's very strong financially. Like, Intel is a very strong company, so I can take advantage of that. And then in a couple years, once those fabs come up and it becomes a bigger part of the chip making industry, yeah, I think I'm going to see some good returns as far as growth. FedEx, I think, is a no-brainer. Like, if we take a look at FedEx's business model is very, very simple. You already know what it does. It transports stuff and delivers stuff. That's what it does. That's its entire thing. And from a value standpoint, like, it is looking really, really good. It's got a forward PE of 9.6. And that was as of the 26th, before it dropped even further. Like, it's got a very attractive forward PE. And if you're thinking it's just a value stock, the PEG ratio is under 1, which is pristine. And if we take a look at analyst estimates for Fedex, I mean, yeah, the revenue is not 10xing, not 10x material, but it's looking pretty good. If these are anything to be believed, and I think FedEx is going to crush these over the next couple of years if the economy returns to some state of normal. We're talking about an 11% increase this year, a 4.5% increase next year. Yeah, not the best from revenue-wise, but from an earnings standpoint, this is looking good. And if we scroll down to the earnings growth, this is looking really good. So I think FedEx is a no-brainer, both from a dividend perspective, a value perspective, and some growth. So that's why FedEx is one of my biggest positions, and I will continue to invest in FedEx as it keeps on dropping. Now, if it goes above 220, I will stop, because value's got to play some role into this. But for the time being, I'm going to keep trickling money into FedEx. Palantir, if you've been following my channel for a while, you know my feelings on Palantir. I think Palantir is got a golden future ahead of it, especially at the price it is now. Like, this is a company that will be profitable next year unless it royally screws something up. And with revenue growth that it's giving, like, I made plenty of videos on Palantir, so I'm not gonna cover this in any more detail. But I'm just saying, Palantir, in my opinion, unless it royally screws something up, is a no-brainer. Now, not FedEx, but Facebook. Now, this is a company that I have mixed feelings about it. Now, I've been putting some serious money into it, but let's talk. So, Facebook, Meta, whatever, is a stock that I think wins from both a 4 PE scenario and a PEG scenario. So both value and growth are on Facebook's side right now. Now that its price has gotten beat down, let's be honest. And this is as of the 26th. That was back when the stock was around $200, so $20 more than it is now, roughly. So Facebook is looking like a snack. And the fact that I don't have to tell you what Facebook is or what it does speaks to what it's going to do. Like, Facebook is absolutely phenomenal. And it's got barely any short interest at all. Like, Facebook is a stock that should do well and absolutely dominate over the next several years. If you took a look at the analyst estimates, yeah, earnings are going to take a hit this year. It's going to bounce back next year. It's got good revenue growth. I mean, from a value standpoint, from a growth potential, like, Facebook is looking like a snack at this price. However, my problem with Facebook is that this company keeps finding itself in so much trouble. Like, so much trouble. And a lot of it is self-inflicted, I think. I mean, I know a while ago, the government started hitting up both sides of the political, the two-party system we have has been really beaten up on Facebook, or at least threatening to. And I think Facebook's actions, as far as just combating this whole quote-unquote misinformation thing, I think it's shooting itself in the foot, and I think that's going to open the door up even further to, let's be honest, some more problems down the road. So as much as I like Facebook from a growth perspective, from a value perspective and stuff like that, I think it has a potential to land itself into so much trouble over the next several years that I got to keep watching the news for this stock, because who knows what's going to happen to this company, what the government's going to do to the company, what Facebook's going to do to itself. Like, it is a pain in the ass to own. That's the best way I can put it. It's got great potential, but it is a real pain to hold on to. But that's my strategy for now and for the foreseeable future, unless the market and the economy fixes itself, which hopefully it's got to happen sometime, right? If we have a functioning economy, and I hope we do, the situation will reach some kind of equilibrium, right? And once we do, all this money I'm putting in and all these beaten down stocks, I should be rich in the long term. But we'll see how it goes. Anyways, take care, have a great day, and eat your vegetables.